today we shall study ICT's Price Action Model 1 from Charter Content. Here we are on NASDAQ's daily chart. In here we'll study this bias wherein the price went down after this big candle, because after that it would have been evident to us that it wanted to go grab some inefficiencies below here. So the drawn liquidity was pretty clear on daily time frame. That's why we are choosing this region. Let's see how we could have navigated it through uh, Charter Content Price Action Model 1. The first point is to uh, figure out 20-day IDDA. And if you're starting from this candle, this big candle, imagine everything ahead of this big candle has not formed yet. And if you're starting from this big candle itself, then 20-day back, let's go to this 18-day look back or 20-day look back. It's saying 21. So I'm choosing by the hindsight, by the benefit of hindsight, I'm choosing the 18-day look back period. On that, I will draw a premium discount quadrant. As you can see, after this candle, imagine these two candles aren't there. Imagine that we only have this one big green candle. This big green candle closes here, which is just about the equilibrium of the entire 20-day range. That means we are in premium. And for a sell model to work, we have to be in premium so that we can go into the discount region. Now, tell me what would be the very first draw on liquidity. As you can see, after the equilibrium, we have this fair value gap here. It's a buy side imbalance, sell side inefficiency. I guess I've said that right. So the very first lowest hanging fruit would be the top of that fair value gap, or the low of this green candle. We'll draw that here. This purple line would be the very first drawn liquidity. And now we'll go to lower time frames to see how this pans out. Also, one more thing to ensure that this is a sell side draw, we have a condition wherein we need a short term low to be taken out. Only then we can we go for sell moves. So here we don't have any sell sides swings or short term swings. This one can be there, but in case you don't find any, the lowest you can drop to is on 1 hour. And if you see we can also analyze this on 1 hour as well. On 1 hour, this was that candle. This was the last candle that we studied. After that, we had Sunday. So there you go. This was all the price action that we had by far. Here we have the sell side taken. And that is the reason why we can go for a sell side trade, since one short term low has been taken out. Now this is the midnight of Monday. We'll go on 1 minute time frame. Here in 5 minutes, the model suggests that between 7 a.m. to 11 or even 10, between 7 a.m. to 10 a.m. or 11 a.m., we have to see a retracement, a Judas swing, upside if we are planning to go down. And that is something that we are seeing here. But how could we uh, how could we have expected it or anticipated it? If you can see here on previous days candles, we have a small inefficiency in this region. Uh, okay, there's the SIBI, which got retraced a little, but part of it was left open. The part of it was left open, and that's why if we draw that ahead, we bring that forward, you'll see exactly on 9:30 opening bell, it taps that inefficiency and starts falling down. You'll also see that if we were to use OTE setting on this one, then the swing leg that we're supposed to use the OTE on is this one. This from this swing high, this swing low. The price is inside the swing leg. We can go on 15 minutes and check that. There was also this inefficiency, but it did not come all the way back there. And it was also overlapping the quadrant level. Uh, we go on 15 minutes and try to draw the OT setting from body to body. Then we get the OT level. The very first OT level is the very lowest, and generally I prefer this one. But we did not reach there. We did not reach the second quadrant line there. Uh, let's go on 5 minutes and see what is happening on 5 minutes there. As you can see in the swing leg, there was this SIBI, but it seems balanced because there is this green candle and then there is this big red candle. So it seems balanced. That's why there was no need for price to reprice till here. Next would be this fair value gap. Although it exists, but just before that, you can see there is again a BPR. Two bodies are touching each other and the wicks are intruding inside those bodies. This entire region becomes a BPR and it would be difficult to pass through. And this fair value gap is pretty small. That's why I think price came in and accepted only this fair value gap and did not go further up ahead. I wish I would have had 1 minute access here. Because of my trading rule plan limitations, I cannot access it right now. The 5 minutes is the only time frame we can access. So bear with me on that one, but I can still show it to you how it works in here. When you see this big red candle on 9:30 a.m. moving or displacing from this fair value gap which you had marked, how would you enter this? How would you capture this? Easiest way is to see this BC right here. You grade it. On grading it, you'll find how the next candle's wick stops right at its very first quadrant. And the bodies are nowhere near the quadrant. So that shows a very good rejection. And you could place a limit order at this mean threshold. And your SL could either be on the high, 5 points above the high, or at the upper quadrant of this uh, green candle. So we grade this. Yeah, right there at the upper quadrant of this green candle. If we are expecting the price to go lower from here, then we should not see it come back to this order blocks, to go beyond this order blocks midpoint. That's why we place our SL just above it. Then how do we predict the target? We know our first drawn liquidity is the purple line that we had marked. Look at that. It did not touch it. But now let's see how we could have taken our partials. Now, one partial to take at is also this level where by far till this point in the day, this was the low of the day. So we could have taken a partial there. Or rather, if you want some a bigger share, then what you can do is you see this Jada swing before the move. This is that swing leg. This is the manipulation swing for the day. What you do is you use OTE on that. I think we can also use projection. Yes, you can also use projection, but in this case, I found that OTE fits well. Okay. From week to week, I'm using this one and I'm in one from week to week. Okay. So our first target is going to be 0.27 level, which is here. First target. Second partial is going to be this 0.62 level. And third partial, the time when we take the position of entirely, and since it's also near our ultimate drawn liquidity, that would be this -1 level. And that's how you would plan out your trade for the day. Now let's take another example where we don't have it available directly, as in it's not easily offered to you. This one felt like it checked all of the boxes. Let's consider next day. Oh, sorry, let's consider the day next to what we discussed right now. So right now we discussed this candle, we discussed this one. Now we'll go to the next one, which will be this day, that is 16th of December, Tuesday. If you see the Monday's candle that we discussed about right now, it stopped right at the high of that daily fair value gap. So now, knowing this information, what would your next draw on liquidity be? I would say my next draw on liquidity would be the low of this fair value gap. And if I were to go even beyond that, then I would grade this entire wick right here. Okay. Alright. I'll remove the initial quadrant. Okay. So we'll check the grading and we'll check how it behaves inside the fair value gap to understand what would be its next target on lower time frames. Let's go to 1 hour from now. Let's see what day it is that we are talking about. Let's go to midnight of that day. Tuesday, midnight. Yes. Okay. Something to notice is see how here the candles are respecting this one a daily fair value gap which we had drawn in blue. Now we'll go to 15-minute time frame, see what's happening there. Even in 15 minutes, uh see how the price is respecting daily fair value gap, which it passed through and then is acting as a reclaimed fair value gap here. Now if you see all this price, we are supposed to consider price at New York session, right? At New York session, if you see it's very choppy, and that's generally an indicative of news. There must be some news driver behind this choppiness you see here. Especially after 9:30, this is 9:30 candle. After 9:30, we have this extreme choppiness here that which is a definite indicator that we had some major news here. And if we go on Forex Factory, and check what we had back then. 16th December, Tuesday, you see, we have NFP. We have NFP, we have PMI, we have unemployment, we have earnings, core retail services, ADP weekly employment change, and so much is happening, which is the reason why this you see this choppiness. As we have multiple news drivers on this day, we'll see the very last news. The very last one was on 8:15 p.m. It's in Indian Standard Time. We'll see what that converts to in Eastern Time. What was it? 8:15, right? 8:15, which translates to 9:45 a.m. in New York Standard Time. So 9:45. I'll draw a horizontal line on that and label it news. And so this is where all the news data is done coming out for the day, and then we can start finding a setup to trade. Next up, uh, what just as the model suggests that we're supposed to find the swing inside which the price is currently. If you go back, this is the swing high and this is the swing low, inside which the price is dancing right now. So we are supposed to draw OTE on it. OTE body to body. Here you can see how this is the OTE level and we have marked it in brown. And price is lower to that OTE level. So for us to go in the direction of sell, we would need the price to come back to this OTE and then we could sell it. But right now it's lower than the OTE level. It hasn't retraced enough into the swing, into the swing leg that we are inside in. So just note this 15-minute OTE level. Above that, we also have, if you go to 1 hour, if you see the swing leg on 1 hour, then you will see all these inefficiencies are addressed before the news, during the news. See, these inefficiencies, they are addressed here. They are traded to back and forth. But the one remaining is this one. This is a 1 hour fair value gap. You see how nicely the price has respected that fair value gap. Later, on next day. But now forget about this one for now. Let's see what we could have done on this day, on the day of Tuesday. We'll go to, let's see what, yeah. There's one more observation here. You can see this here on 1 hour is a breaker, which means this candle, this down candle, is a breaker block candle, and I have extended it out to the day of Tuesday. Let's go on 5 minutes. Okay, this is the day of Tuesday. And after the news, if you see, kept dashing into this fair value gap midpoint, consequent encroachment multiple times, and something happened right around here. And this would be a lunch hour macro. Let's see. This is the lunch hour. This is where the lunch hour starts. After that, okay. This From this area to this area, we have our lunch hour macro, and inside that lunch hour macro, price consolidates around the consequent encroachment of the fair value gap. Later, if you see, after 130, now that price has taken out minor buy side and minor sell side of the AM session, then it leaves this fair value gap here, which is our institutional order flow entry drill. Let me write it down. Institutional order flow entry drill. As you can see, it respects that FVG's midpoint, consequent encroachment. From there, it gives you a target till our OTE mark level. Now, it was important for us to skip AM session for this day because we had too many news coming out and a lot of back and forth trading. Yeah. So this was a counter trend trade for this day using the charter content model itself, but in a different way. Now, for target, I would use OTE on this. This was the previous swing, right? Inside which it retraced and gave us an entry. You see, it's just at this OTE level of ours, the middle level. That's why it takes a bunch of support, then moves up. So this would have been our first partial. here. You take your first partial and then you plan for the second and the third year. Uh, wouldn't go that far. I would have taken it out here. But once you have booked your first partial, you'll see price coming back down. Imagine if you have moved your SL to, let's say, where would you move it? Hmm, to this candle, or to this candle, or to this swing low. Then you would have gotten knocked out for the later half of the trade. So that's how you would have navigated the next day. Now let's see what we could have done for the day after this, after all these news drivers. I'll remove this for now. Maybe that. Okay, now let's go on 1 day time frame and see what we could have done for the day of Wednesday. This was the day that we talked about right now, Tuesday. If you see, it stayed just above the very first quadrant of the wick that we had graded and retraced all the way back up. What I would have done is I would have just I would have graded wicks this candle's wick, and my drawn liquidity would have been the low of this wick and then the consequent encroachment of this bigger wick. Let's see how that pans out on lower time frames. Let's mark the midnight for Wednesday and we'll go to if you see for Wednesday, it's more like a continuation of what had happened yesterday, what had happened on Tuesday. If you go on lower time frames, then you will find that this seems to be the initial Judas swing for the day of Wednesday, and in New York session, it is rejecting at the 1 hour fair value gaps mean threshold, consequent encroachment that we had planted yesterday on Tuesday. Now let's see where is the 9:30 opening. This is our 9:30 opening candle. All we had to see this day was if there is a rejection from this fair value gap, and we could clearly see it before 9:30 around. This is 8:45. Let me go on lower time frame. This is to see this fair value gap. This one, it taps right in and then falls lower. Let's go to funnel and see what it's doing. I can't go any lower than 5 minutes, but we'll make it work somehow. This candle was 8:55. This could have been your entry First candle pierces its way through that fair value gap. The next takes the support from its consequent encroachment. Later, we also have this another fair value gap coming up, and we have these two possible entries. If we take this entire swing leg, we use it from body to body for OTE. Let's see, yes, it stays right at the lower end of that OTE grading, even here. So this would have been a good entry for us before the 9:30 opening. After 9:30 opening, we get these big candles. We have breakaway gaps, little consolidation, and then a very strong move lower. I wonder if there were any news drivers for this day. Let's see. There were no news drivers, so it was quick to act on whatever the leftover job it had from previous day. Our targets would have been the ones that we had marked on the daily, but also using body to body OTE on this Judas swing of the day. See how, because the price was in a hurry to leave this week's trading, the price has constantly rejected closing body above this initial wick and going into this fair value. This was an indicative of strong bearishness and could have been an entry as well, but it could be a little difficult, but still an entry. Our first partial would be here. It's also the daily wicks upper quadrant. The second partial would be here, near the consequent encroachment of the daily wick. The third closing of the position would be here. Talking about our SO, we can place it here 5 points above it if we are entering on this fair value gap, or we can place it here or just above this if we are entering here on the second fair value gap. This was us navigating the charter content's first price action model on days 15th, 16th, and 17th of December in NASDAQ.